Hey everyone, Michele Brandt. How's it going? It's Tuesday afternoon. We're excited to be here today. No snow yet out here in Elk River. It kind of looks like it's looming on the horizon though. Today we're bringing some information to you about reverse mortgages. So many misconceptions out there about reverse mortgages, and it's such a passionate product that I just got back from training on not that long ago. You'll have to excuse me if I look down at my notes because I've got some notes just to make sure that I get you the most accurate information because it is a newer trained product for me, but one that I'm extremely passionate about. And obviously I have to wait a little while until I get my own, but I'm definitely going to be first on the list to get my own once I can. So a lot of people have misconceptions about what a reverse mortgage is. And there's a few rules that apply when it comes to who is an eligible candidate for a reverse mortgage. The biggest one is the age. So you have to be 62 years or older. Now, if we've got a married couple where there's a 62-year-old and a 58-year-old or 49-year-old or whatever, one person has to be eligible. So as long as one of the people in the married couple situation is 62 years or older, they would qualify for a reverse mortgage. It's also very helpful. An ideal reverse mortgage candidate would be someone that's got quite a bit of equity in their property. 50% down or greater as a general rule of thumb would be beneficial. And then the third qualification, or somebody that would be very beneficial for a reverse mortgage, would be someone that's still making a mortgage payment. When I talk to and meet with financial planners, a lot of them say that the biggest expense for baby boomers or seniors is a mortgage payment. And so if we can eliminate that mortgage payment and take them into a better position going forward for the financial planner and for the buyers or the borrowers, that makes everything happen better. So 3 things, 62 or older as a household, 50% equity or better. They can have their home free and clear as well, that's fine. And then, or still making a mortgage payment. 3 ways when you're 62 years or older. Well, I should back up. You can use the reverse mortgage for 3 different things. A lot of people don't know you can use it to actually buy a new home. So if you want to buy a new home and you don't want to utilize all of your cash resources, a reverse mortgage is an excellent option for you. It allows you to purchase a home and not make a mortgage payment and not utilize all that cash. So basically, a reverse mortgage allows you to pull the equity out of your property and turn that into cash. It's estimated there's about $7 trillion in equity right now sitting out there not getting touched, which is crazy. I look at it and it's like, I love home equity, right? People love to have that feeling of their home being paid in full, and it's just a good feeling to know, once you pass, you can get your kids can inherit that. However, if people are struggling, paying with groceries and utility bills and they're living, paycheck to paycheck just to have that equity, that's a problem. We don't want people to live like that. So it takes your equity and turns it into cash. And last time I checked, you couldn't go buy groceries or pay your gas bill with equity. You got to have cash. So this allows that. This is a vehicle for that. So 3 different ways that you can use a reverse mortgage. Number 1, purchasing a home. And you can do that and never make a mortgage payment. Number 2, if you have a current mortgage and you just don't want to make a payment anymore, you can actually refinance your current mortgage or existing debt and turn that into a reverse mortgage. So you can eliminate a mortgage payment with a refinance. Number 3, let's say you don't have a mortgage on your property and you're not planning on purchasing something new, you're going to stay in it, you can just turn that into a line of credit for future. So if you want to buy a second home or vacation home, if you want to buy a car or a motor home or whatever you want to do, you can have it sitting there as a nest egg to utilize later or never. You don't have to use it. That's the beauty of a reverse mortgage. When you're buying a home and you're over 62, a lot of folks want to pay cash, right? They want their home owned free and clear because they want to avoid that mortgage payment. It's expensive. Or you can do a forward mortgage, which is your traditional, conventional FHA, VA, USDA, those traditional mortgages where you start with a high loan balance and you're paying it down or building equity with each monthly payment. Or you can do it as a reverse mortgage where you do the exact opposite. You're utilizing that equity and you're paying and you're getting cash out of it to avoid that mortgage payment. I'm hoping this makes sense. I'm trying to make it as clear as I can. 3 ways to get cash out of a property when you're doing a reverse mortgage. So there's really 3 big things to do with a reverse mortgage. Now this is again on a refinance, not on a purchase. You can do it as a lump sum cash. So if you just needed $100,000 to pay off debt that wasn't mortgage related, or buy a cabin or a motorhome or whatever you want that money for, you can do it as a lump sum. Just get a big chunk of cash out after the reverse mortgage is done. Similar to a cash out refinance on the forward mortgage side, except that you don't have a payment with that, which is the big, big benefit. Number 2, as I mentioned before, you can do it as a line of credit. So you can do it and you can just let it sit there and work to your benefit when you need it. If you needed $5,000 here or $10,000 there, you want to utilize that equity as cash down the road. Again, you don't have to, but it's a great vehicle to have as an opportunity, and there's no payment that's attached to it. Some people opt to actually pull money as a monthly payment as a third option out of their mortgage. So you could turn it into a term where it's actually paying you money. Not only then do you just avoid having a mortgage payment, but you're actually turning that into a vehicle to pay you out monthly. And you can turn that into a certain amount, or you can turn that into a certain number of years that you want that money. A lot of it's just going to depend on how much equity you have and how old you are. Everything is determined by your age with this product. The nice thing is you can switch out those in any time. So if you were getting a monthly payment, you're like, I don't really need that. Let's just stop that now and turn it into a line of credit. You can switch in between the 3 options, and it costs $20 every time you do it. So it's really easy to make that switch once you close on that reverse mortgage. You can also, if there's enough equity, do all 3 at the same time. If you need to take out a lump sum to pay off a little bit of debt, you want to have an available line of credit, and you want to pull out some monthly payment, you can do all 3. That's totally fine as well. So super unique product. Trying to think if there's anything else. Give me just a minute. I'm going to review my notes to make sure that you guys get everything that you need. I would say the best thing to do if you're considering it, or if you have somebody that thinks that they qualify for it, is to just start having conversation and just get me involved right away. Oftentimes it'll take 2 or 3 couple-hour meetings in order for us to really understand the benefits of a reverse mortgage, if it does benefit you. It doesn't benefit everybody. It's not for everybody. So you definitely want to make sure that you start with just some initial conversations. Kathy, you asked the age. Minimum age is 62, and if you're a married couple, just the oldest one has to be 62. So you don't both have to be 62 to get a reverse mortgage. Oh, I know. Another common misconception is that you can lose your house, or that once you pass away, your heirs are subject to having to pay this loan back. Because with a reverse mortgage, your loan balance is actually increasing instead of the forward mortgage where it decreases, right? Because let's say you get a $200,000 forward mortgage, conventional mortgage. Every single time you make a payment, it goes down, right? It drops down until you've paid it off and it's 0. With a reverse mortgage, you might start out at $200,000, and every single month you're not making a payment, and that interest is still accruing, so it will add up. Generally speaking, you don't outlive the loan, and there's still some equity that's built into that after someone passes away. But occasionally, someone will do what's called outliving their loan, where the mortgage balance actually rose higher than the value of the property. It's negative upside down, right? So the home mortgage balance is higher than what the property is worth. You have, so once everybody that's on the loan has passed away and is no longer part of the mortgage because they're passed away, you've got 1 year. Your heirs have 1 year to kind of take care of all of the final things with the loan. The beauty part of it is that if it is upside down and you outlived the loan, your heirs do not have to pay back a dime. It's completely written off. And the reason for that is because the mortgage is attached to the property. It's not attached to the person. So it's very different from an obligation, a financial responsibility to repay like a forward mortgage is. The reverse mortgage is attached to the property. And so once the person no longer lives in the property because they passed on, then that property essentially is part of FHA, and they go out and turn it into kind of like an FHA foreclosure, but their heirs are not responsible for any of the debts associated with that mortgage. Conversely, let's say the home has a mortgage balance of $200,000 and it's worth $400,000, then the heirs can sell it. They pay off that reverse mortgage balance of $200,000 and they realize the equity with the sale of the home. So it's very much so like a forward mortgage in that regard. You just pay it off, except that you don't have the monthly payments when you're dealing with that final last year of life or last year after life. I hope that made good sense. That's a really important component because I think a lot of heirs are very leery about the loan because they don't want to be stuck with this high mortgage balance after their parents pass away. And that's just not the case. There is never a debt that's going to be due by the heirs. If a married couple takes out a mortgage and one passes away and one is still in the property, both have to pass away. As long as they were both on the mortgage and note at the time it was originated, both have to pass away in order for that 1 year to start. So if one passes away, the other one can continue to stay in the loan, in the mortgage, in the home. They don't have anything that they have to do in order to just keep the property and stay. The only way you can lose the house, essentially, the only way it can go back into foreclosure is if you stop making payments on your property taxes. But if you don't have a reverse mortgage and you stop making payments on your property taxes, the county will come take your home. So you have to pay property taxes anyway. It's just how you pay them and keep them maintained is going to be the only key. Because there's no mortgage payment required on a reverse mortgage, they just ask that you keep the property taxes and insurance going. We are at 12 minutes. If anyone has any questions, feel free to chime in. I'm just going to make sure we don't have any extra questions. Kathy, I think I answered yours. It's really important in the beginning stages to just start fact finding. What is important to that person? What are you looking for out of it? Tell me more about why you want to gift your house to your family, because a lot of people think that, right? I want all the equity in my house so that my kids can have my house. Kids don't always want your house, and kids don't always want that hassle of having to get that house taken care of when you pass. So sometimes it's important to have those conversations. When we're meeting with reverse mortgage clients, frequently I'll have their financial planner part of the process right up front, because it's a trusted person that they, we can have a really good dialogue all three ways. So the borrowers, myself as the professional mortgage person, and then the financial planner. Oftentimes I'll also bring a child in, if there's a kid that is a pretty prominent role in making those decisions or helping parents with those decisions, I'm going to get them involved. I will never hide anything from anyone, and I would rather provide way more information so people feel really, really comfortable and confident, instead of just saying, you need a reverse mortgage. Why wouldn't you get one? Well, because there's reasons. Maybe you don't want one, or maybe you don't know about them. So it's my job to educate, and I'll do that as long as it takes, because I'm very dedicated and passionate to the project. Let me just look through this really fast to see if I have any last things. Let's see. Yeah, I think that's all I've got. I think it's really important to get yourself educated on it. If you have questions, please reach out to me. I'd be happy to schedule a one-on-one, meet for coffee, come out to your property and check it out, and get to know a little bit more about your situation. Thanks everyone for listening. Take care.